Hi everyone, and thank you for coming along today to today's Forex webinar, where we'll be looking at really the American market and using the NinjaTrader platform. Although I think David's got Trading View as well. Danny, have you got Trading View up? Brilliant. Okay, it's got Trading View. But before we start, as usual, may I just draw your attention to the disclaimer that I know is on your screen. So, as you know, this can be a very risky business. So please don't even think of using money that you cannot afford to lose. If you've not been with us before, here we are. That's me. That's David next to me. And we'll be in the webinar. What we cover is obviously the Forex market with the NinjaTrader platform, and today we've got the Trading View platform as well. But we look at it through the prism of volume price analysis. I know from some of the names that I can see on the attendees, we have people who've bought the books, and this is the Forex Trading Library that is available up on Amazon. And I can also see we have some of our quantum trading customers here, so it's users, so it's lovely to have you all. And I can also, I see some names I don't recognize, so if this is your first time, this is what we do. We look at the market, look at the charts through the prism of volume price analysis, but we also include the fundamentals and how the related markets are impacting what is happening on the charts that we are looking to take a trade on. Everything's explained in the library, as you see there. I think it's $9.99 up on Amazon. It's the ebooks, and really it's our approach that David and I have used to all our trading. This 3D approach is, this is the one that's specific to Forex, but 3Ds in the sense that even with stocks, we look at the fundamentals and we look at the other markets to try and establish what is happening with sentiment, where is the money flow. The Forex market is where you see that most dramatically in terms of the currency and currency pairs, but all these markets are interrelated, and they're all supported with our quantum trading indicators. Before we move to that slide, this is a slide actually from our education program, the Forex Trading Education Program. And here you see what I'm trying to explain about the 4 capital markets. If you've got a news feed, I know you will see headlines now. Everybody's referring to the 10-year bond yield. And if you were with us last week, which was a fantastic session because we'd moved it from Thursday to Friday, and we had some brilliant moves we looked at the euro yen. Oh yes, it was the German data that spooked the market last week, and actually we had a big correction on the indices as well. And we actually talked about the bond yields, how they represent sentiment. Bonds is the cost of money in the market. So in fact, it's how much it's going to cost you to go and borrow some money. And when yields are falling, the money is cheap. So you would think, well, okay, if money is cheap, that means equities should be rising, because if money is cheap, companies can expand, etc., etc., etc. But you have to place the fall in the yields in the broader context of the business cycle, the economic cycle, and what is happening generally, in the broader market. And everything is everything's very nervy at the moment. Data has been coming in which hasn't been fantastic, and in fact, for the first time in a long time, individual pieces of fundamental news have actually had a very big impact on currencies and currency pair moves. Last week we had the German data. This week we've had the statement really from the New Zealand National Central Bank talking about a cut in interest rates. That did for the New Zealand dollar earlier in the week. I think we've just had advanced, is it GDP, final GDP from the US, which kind of came in as expected. And this is the kind of information that you have to kind of pull together when if you want to pursue some sort of career in trading, not just Forex trading, but any kind of trading. But it takes time, to pull this information together. We all start with charts, we all start with technical analysis, and gradually you have to build this information, this knowledge, if you like, slowly over a period of time. And finally, we use our quantum trading tools. This is the currency dashboard. David did a a huge explanation of this if you weren't with us last week. And we had one of our new users, and he just wanted a talk through of the currency dashboard. So we're not going to do that today. If you go onto YouTube, there is that recording, and it's the beginning of the webinar, so you can listen to it again. And in fact, I think he came back with a really nice email, didn't he, David? He did a very nice email that said, it was great to have such a clear and concise explanation of how you would approach, how you use these indicators when you are looking to take a trade. I'm going to stop there. I'm going to pass to David, and then we'll look at the charts.
Thanks, darling, and a very warm welcome to you wherever you are in the world. I hope it's as nice as it is here. It's a lovely sunny day now, and fortunately spring has arrived, thank goodness for us in the UK. So I hope you're well wherever you are. Very warm welcome. If this is your first time, yes, well, it's jolly cold in Canada, I know. But fortunately warming up for us Brits here, so we're very grateful. Great to have you here. I know I can see a lot of regular visitors in the room, attendees who come along quite often, so you'll know what I'm about to say. But if you are new here, we run this as a two-hander between myself and Anna. And if you do have any questions, please just drop them in the chat box. We are happy to answer them there if they're short questions. And if they're longer ones requiring more detail, then we will answer them on air for you. I'm going to pass back to Anna, and we will get going.
Apologies about that. I just want to move on to the other screen. Oh, right. This is the this is my Ninja. I've got Ninja 7. David has got Ninja 8. There's a couple of things I want to point out, certainly to do with the pound yen. I don't focus only on the pound yen, but it's one of the reasons I like to look at this pair is, first of all, I trade it, so that's the first thing. So I kind of know it very well. Secondly, it's a great pair to have on live, as it were, because unless the market is completely in the doldrums, it does move, and it's a great pair for showing volatility, lots of volume coming in. So there are always VPA lessons. There are lessons to explain how some of the indicators work and why we've developed them, and how you can benefit from them. So all in all, it's just a great pair to have as an example, as it were. I'm not suggesting that you go, if you're a new trader, you rush out and attempt to tame the pound yen. It's not called the dragon for nothing. Riding the dragon. One of the reasons is because it does attract a lot of hedge fund money, and I believe a lot of algos are also in this pair. That doesn't actually negate or because people say that, I say, well, if it's something that has lots of participation from these traders, part of the market with very deep pockets, is that going to cause me, a humble trader that I am, an issue? No, it won't. In fact, there's lots and lots of liquidity. The issue is that because you do get more volatility, that is what you've got to be aware of. But if you understand how you can make volatility your friend, as it were, you can actually get some great trends out of it. And this morning was a great example. It went up and then it went down. And you can talk in a move in the pound yen. You can talk some decent double figures, 30, 40, 50 points. It's not unheard of in a pair, such as the pound yen. If volatility is not your thing and you feel a little bit very nervous about it, then there are lots of, stick to the majors, stick to something with a dollar. But as I always say, just make sure that the pair that you want to become familiar with is actually going to move has a reasonable range the session that you are looking to trade. The pound yen is always, because it's got a yen in the pair, is also going to reflect sentiment because of the yen, and of course because of the British pound, you've got the added layer of potential volatility of what is going on and what is not going on here in the UK. I think David and I, we've lost sort of words to describe, really, isn't it? I mean, if anyone had said it for each of the level or the, you know, where we are at the moment, I don't think you really couldn't have made it up. And I do wish bloody Theresa May would take that ruddy coat off, that blue coat. I think if I got hold of it, I'd throw it onto a bonfire. Anyway, that's my rant over. Right, sentiment. What's happening? I mentioned the 10-year yield. If you don't have it on your broker platform, if you head over to investing.com, I've set it up with bonds here, and you can have all the charts. And this is the weekly chart for the 10-year yield, and you can see here it is very bearish, and it's actually reaching an important support level at 2.314, which is back in 2017. If we go back if we're on the month, let's have a look at the month. Right, here we are. It tells us here. This is not the lowest it's been, but you have to read this in conjunction with what the Fed also sees as its range of interest rates. Is it at the bottom or the top? But what it also does, it gives us this view into market sentiment. Is the market wanting to take on more risk, or is the money flow into safe havens, into protecting what it has? Money is either seeking a reward or it's seeking to protect what it has, and the bonds is where you will find that reflected. So if the yields go down, as I said, the cost of money is going down, but it also reflects sentiment. And in this case, it's not a good sentiment, it's a negative sentiment. We have the S&P VIX up here. As I mentioned last week, once it starts getting over 15 towards the 16, that is also indicating that we can expect equities to sell off. And finally, there was one other site which I highlighted a little while ago, but I haven't highlighted it recently, is this one. And it's over at CNN Business, and it's a fear and greed index. And we can see here, it's just a very simple indicator. It's made up of a lot of indicators, but basically it gives us this what am I trying to say to you? This dial, if you like, that's the better. So we have extreme greed and extreme fear, and in fact, it's been ticking over to the red for the last 2 to 3 weeks. How that's reflected, as I said, in the forex is you will see. Let me just move this out of the way. Buying of the Japanese yen and also buying of the dollar. And if you have strong dollar buying, strong gold buying, strong yen buying, then oh boy, we are probably reaching the point where we were just prior to the Lehman Brothers episode back in 2008, David? 2008, something like that. Yeah. Right, so there we are. That's what I've got to say on the background. At the coal face, as we say, when we're looking to take a trade, I've got the pound yen as I've got here, and I've got the 3-minute chart of the pound yen. And I was looking at this this move that we see here, and we can see here we've got the pull away from the volume point of control. We've got rising volume, and we have this really nice down candle with a lot of volume underneath it. But then what happens? You think, oh goodness, well, what's happening there? Because that looks like a really nice waterfall, and in fact, it also coincided with, let's move that right back, when I looked at the CSI. This was about 11:30. It was also a turn higher. We could see the pound yen had been falling, but it was looking to turn higher. What happened when you have one chart? You see that was the move that I was looking at. It was great, wide candles, rising volume, and then this happened. It went sideways, and you think, well, what's all that about? Because with VPA, this is what we would be looking at. We would be looking at falling prices, rising volume, or rising prices and rising volume, a confirmation, a validation of the price action. And this is where it's really important to have multiple timeframes. And in fact, I often get emails from people who send me one chart and say, is this an anomaly? They highlight a candle and a volume bar, and they say, is it an anomaly? What do you make of this? And I always go back to them. I say, well, that's awfully interesting on one chart, but you've got to look at this in the context, as I said, of more than one time frame. Excuse me. And it's only when we look at the 30-minute chart. I sometimes use this, I have the 30-minute and I have 1 hour chart as my kind of benchmark charts, if you like. And what actually happened was that price action that we had on the 3-minute chart was actually contained within this candle that we see here. And it triggered the volatility indicator. Now, what inevitably happens when this is triggered is price action retreats to within the spread of the candle. And yes, that was a fantastic move that we saw there, potentially. But because we were looking at it in multiple time frames, we knew that the likelihood was that it was actually potentially we were looking at a reversal. We did have a little reversal here on the 3-minute. We saw a rise, falling volume. It did fall a little bit further, but we then got this 2-bar reversal, and the price then managed to go back and retest the VPOC. We had a little 2-bar reversal there, a pullback, and in fact it went higher. And we've had another trigger of the volatility candle, this time on the 3-minute chart, and we've had the inevitable reaction, which is a retreat to within the spread of the candle. All highlighted also on the Renko. The Renko helps to identify those potential entry points. It helps to keep us in. The indicators help to keep us in, and they also help. The Renko helps with the exit. Now, when you have a trigger of the volatility, as we've seen here, and you're not in the trades, for example, what do you do? Well, we've got a congestion phase building at the moment on this chart. The level is very clear. You've got the high of the candle, you've got the low of the candle, which actually sort of sits at this support region here. We've got the price actually around the VPOC at the moment. So everything on this chart is telling us that there really isn't a firm direction for this pair at the moment. And when we look at the CSI, as we've mentioned before, the lines are traveling in the same direction. This is on the 5-minute chart. When you see that, you haven't got any strong divergence. If you were looking for a trade at this point on this chart, you would probably be better looking for something that is either reaching a point where you're going to get some divergence, either at the extreme. We've had here the Canadian and the euro. You've got the euro CAD here, or you're going to wait for one of the lines to turn and you are going to get a cross. And in fact, we've got here the pound and the euro. We've got the Canadian here, got the dollar rising. This is how you would use an indicator like this. You do use it at extremes, as we see here. We've got euro dollar, which I think, David, have you been looking at euro dollar, darling? And euro yen. And euro yen as well. But for me, on pound yen at the moment, I just have to be patient. I have to, I just have to wait until I can see some kind of divergence. And I've got also here the range that this pair even is on the 30-minute chart. And in fact, in the 30-minute chart, because the price action hasn't moved outside the range of this volatility candle, and until that does, I'm really not going to know if this is going to carry on higher or consolidate further or even turn lower. So this is how you look at price action with volume and with volatility, and if you have our indicators as well, what the indicators are telling us. And the yen is actually, it looks as though it is selling off, but in other words, it's selling, but it's not in the pound yen at the moment. It may rotate into the pound yen, but we'll have to wait and see. I'm just going to pass over to David. Do you want to keep my charts? Yeah, fine.
That's all right. Anna's voice is getting a little bit croaky. Just to take over and pick up on what she was saying there, if you actually look over on the left-hand side, the 5-minute time frame, top left, what we've done there is attach or what Anna's done on her side is attach the currency matrix to the currency CSI. So you've got two indicators on one chart, if you will. But what's interesting about the ranking there, it really does reinforce what we're seeing right now, which is you can see the pound yen there. It's dropped down to spot 8. I think when we started, we had a full house basically. All the yen pairs were neatly stacked one on top of the other. They've now been split with the euro pound. And if you actually look at the value on the right hand side, you can see how far off, if you will, the 4.4 strength in the pound yen versus the CAD yen up at the top there at over 18. One of the questions we get asked a great deal about the score is really, what is its significance? What is its relevance? And the relevance is, it's not really the score per se, it's the numbers are there simply to indicate how far we are away from zero. And when you use the matrix on a regular basis, what we haven't done and what we are thinking of doing is a little bit like the CSI, where you've got some guidance as to what is overbought and oversold. Possibly do something similar with the matrix. Once you start using it on a regular basis, you get a very good idea of what is a high number, what's an average number, what's a low number when you see these stacking up on the ranking ladder. And for a 5 minute, typically you're going to see something where we are at the moment, 18, 19, 20, 21, 22. When you go up onto the other time frames, they have obviously different scores. And you can see there literally, as I'm speaking, the pound yen is dropping, it's falling away. We're starting to see also the Aussie yen and New Zealand yen breaking away too. Now that may be indicative of the fact that, as you can see over on the right hand side with the CSI, certainly on the 5 minute time frame at any rate, the Japanese yen is potentially getting into or moving in towards an oversold state there down at the bottom right. So that may be the start of potentially a reversal opportunity when all those pairs move right the way down the ranking ladder, and in an hour or a couple of hours time they're all sat at the bottom because we're now seeing strong yen buying coming into the market. That may or may not happen. But going back to the point I was making, first of all, the score per se is not important, but you will recognize where you are in terms of what is high, medium, or low when you use it regularly. As I say, we are looking at doing something like that, a similar way we've done with the CSI. We've got the 80-20 levels to indicate potentially overbought and potentially oversold areas. It's just a guide, really, no more, no less. The second thing about the currency matrix particularly, and also this applies to the currency array, is giving you a very, very quick and intuitive feel of whether sentiment towards a particular currency is universal. With the yen, it's very straightforward because they will all sit in the same sphere of operations. So they'll all either be at the top or they'll all either be at the bottom, because the yen is always the counter currency. It's a little bit more awkward when you're dealing with other pairs where that's not the case, but in the yen, it's very straightforward. So when they're all ranking or joining one another at one extreme or the other, then sentiment is universal. That is starting to fracture a little bit, not hugely. We've still got pretty much universal selling of the yen right now. We're just coming up, we're 20 minutes away to the US Open, so quite a lot will depend on how the markets react in terms of risk sentiment, and that will then be reflected across the yen matrix anyway. So, it's no great surprise to see a pause point. In terms of opportunities trading right now, you can see how strong the buying of the euro is. I've got the euro yen up on the NinjaTrader 8, which I've been tracking. And what's interesting is I was also looking at it from the perspective of euro dollar, but that's totally becalmed now because it's gone into congestion because you've got the dollar rising with the euro. But the trades to look for are certainly around the euro yen. You've now got the New Zealand dollar, which looks to be selling off quite strongly on 5. You've got the Aussie kicking over quite strongly as well. So in terms of potential opportunities, you'd be looking at euro yen, euro New Zealand, euro Aussie. Pretty much that's about it for the time being, certainly as an intraday scalping trader. And there you can see Anna's actually isolated out the euro for me. And again, it's a mixed picture. You can see up at the top there, or near the top in spot 4, you've got euro yen. And the reason that is there is because the euro is being bought strongly and the yen is being sold reasonably strongly. It's not as strong as the euro. It's not diving at the same inclination angle because it's starting to flatten. And that's why the euro yen isn't up the top there. And as you work your way down, you look at the Euro Swiss, the Euro CAD, and the Euro Dollar. Why are they mid-table? Well, they're mid-table because The euro and the dollar are rising. The euro and the Canadian's flat a bit. It hasn't rolled, so there's no momentum there. And the euro Swiss, you can see the green line is rising along with the euro. Now, the strength of buying in the euro right now will be sufficient to develop a minor trend in some of those pairs, but certainly not the strength of trend that you will see in the euro yen right now, and certainly not the same strength you'll see in euro New Zealand and euro Aussie, because they are just starting to roll over and descend quite steeply. And if that carries on, you'll see a very, very nice trend develop in those two as well. It's all about understanding the CSI, understanding the matrix, and you'd be looking at the currency array. We're looking at Anna's flick back to, are you on the pound? They isolated out the pound now.
Just isolated the pound because,
yeah.
Sorry, with the yen, go back to the pound yen.
There we are, back to the yen.
It's a bit adrift from the others because if you look at the pound,
okay. I'll pass back to you for a moment.
Yeah, just quickly.
Just going to pass back to Anna for a minute because it's probably easier for her to talk to that screen than me. Hold on.
I've just been sorry, when we were looking at the yen, and David was let's move the yen one. There we are. We can see here at the time the pound yen was very much adrift in terms of values from the other yen pairs, and it was, as I said, looking at the chart, it was the lines were going in the same direction, and it was around the volume point of control. It has obviously it's moving up towards joining the other yen pairs, and you think, well, why is that so adrift? And if you then look at the pound part of the equation, you can see here the pound has been sold off quite heavily because it's also you've got this, as I said, the Brexit factor, which explains why it hasn't got the momentum to join the other yen pairs at the top of the ranking ladder. That's all I wanted to say on that. Do you want to move over to your side, or do you want more to say on that? Yeah, okay. Yeah. And just to finish off on my 3-minute chart, what's happened? We're still trading within the spread of this volatility candle here on the 3-minute, and we're also still within the spread of this 30-minute candle here. So, but looking at the matrix, it really, the pound yen in terms of the yen pairs, it's really way off the values of the other yen pairs. And as I said, although it's sort of turning up slightly here because the yen is also reaching oversold, it may not be sufficient to actually push it out of either the 3-minute candle or the 30-minute candle. Do you want to go back to you? Yeah, I was going to move over to David because he's been looking at is it euro dollar? Euro yen? Euro yen, which is being bought quite strongly. Turn myself off.
Should be coming up any minute now.
Except on mine.
Except on Anna's. I have no idea why. Technology sometimes drives you bonkers. So Anna can't see my screen, but hopefully you can see my screen. Six charts.
I'll come stand next to you.
Just going to move that out of the way. So hopefully you can see. Sorry, I had a frog in my throat. I wasn't trying not to cough on air. I've got 6 charts up, euro, yen. I've got 3, 5, and 10-minute time frame across the top, and down the bottom I've got 30. I've got the Renko, and I've got the euro, yen on the daily chart bottom right. And as we've seen this rally in the euro, strong buying in the euro, equally strong selling in the yen. If I hop over onto the indices themselves, which are here, there we go. That's what we've got at the moment. These are on 5 minutes, all pretty fast time frames. That's on the yen index, so we're seeing decent selling of the yen. This is the dollar in the middle, so we've got some pretty nice buying of the dollar. And over on the right-hand side, this is the euro index. Was pretty strong selling, and we're seeing this buying coming in now on the euro. Just go back to the euro yen again. Reaching a pause point at the moment. We've gone into congestion. We're on 3. We had a volatility candle. We're trading around the volume point of control, and this level here is pretty important. If we get through the tops of these candles here at 124 spot 20 with decent volume, then we've got a pretty clear run from 24.20 right the way through to 24.30. So there's 10 pips up for grabs there if it breaks that region without anything in the way. You've got no price resistance or price that's going to act as resistance at any rate of any consequence. Just pull that back a bit, just make sure. And then over on the volume point of control itself, you've got this low volume region, very light volume all the way through from 124.20 up to 30. So 10 pips there, light volume and no price resistance. So, it looks pretty good to go should that break through. If we head on up to the 5-minute, reason we're trading there is you can see the resistance here. This is the accumulation distribution indicator. It works on price. It's price-based support and resistance, exactly the same as on MT4 and MT5. It's looking at the number of times a region of price has been tested or retested. This level is very strong because it's wider. This level, this red dashed line, is very strong. Below it, you've got the volume point of control, the yellow line, that's the fulcrum of the market. And this level here is less strong. You might not be able to see it, but over on the right-hand side, this has actually been tested 3 times. If we get through that, then it's going to provide a decent platform, not the strongest, but certainly a nice platform of potential support if we get a close through there and on up. And you can see here also, again, similar picture. We've got pretty light volume on the volume point of control, so volume is not going to play a key role. The price action should go through there pretty quickly because we've got nothing in the way of prices to prevent it, and we've got very little in the way of volume also to prevent it moving pretty swiftly. Up onto the 10-minute, doesn't really tell us very much other than that. I'm just scanning down onto the other time frames, see what's what. Yeah, that all looks fine. You can see here on the trend monitor, we've transitioned through, we've gone from the bearish red into darker red, now we're through into bright blue and supporting that move. Exactly the same on the 5-minute. Up onto the 10-minute, similar picture there. 30-minute hasn't transitioned, you wouldn't expect it because, we're talking relative time horizons here, so we've had no transition here. Down onto the Renko, that is just reflecting the fact that we're in a congestion phase at the moment. And then down onto the daily chart for the euro-yen, you can see what's developing here. We've got a deep wick to the underside of the candle, but equally we had a daily volatility, pretty much identical sort of price action here. This was, I think, from memory, Draghi. Pretty sure it was, and we had the volatility candle on the day, which is, it happens. We had one here with the flash crash. It goes without saying we had one there. But these are relatively infrequent occurrences, and when they appear, they can often give you a strong signal of what is going to happen. Is this market going to carry on or is it going to rally? This is it rallied. I spoke about this price action before. This catenary price action is weakness. When you get this curvature into the top of a price move, it's often indicative of a reversal coming, or at the very least, it's not a strong move, because if you want to see a strong trend, you want to see price action that's steady, is rising in price, spreads widening perhaps, but certainly not rolling over like this. We saw that. Now we're into the volatility. Now we're trading inside the volatility candle again, and we've got the volume point of control sat there as well. And just to go back to what I was saying about price support and resistance, you can see up here the strength of resistance that is going to come into play if we ever get to 129 spot in the next few weeks or months. That is a very, very strong level. Equally, you can see we've got one here, not quite as strong, but pretty decent, and that's kind of acting as a platform of support right now. It's being tested here, it was tested here, it was tested again today. It seems to be holding. The issue for this particular pair, certainly from a short perspective, is if it breaks below, anywhere below, let's say just below 124, 123.80, somewhere along here somewhere, you've got absolutely fresh air below, certainly in terms of the daily chart at any rate, and very, very light volume all the way down here. So you'd see an absolute collapse in the euro if this, from a technical perspective, if this one of these levels was breached. It's literally just the trap door is going to open, and away we go. See where we are, still trying to break through that region. Let's go up onto the 3. Classic price action developing. We've got the pivots. This is real-time trend and congestion analysis. It's something we cover in huge detail in the education program, but it's really understanding where you are in the journey of price action and seeing it at the live edge. Anyone can draw on lines and show a trend, and it's touched 3 or 4 times, whatever it is, and put a nice straight ruler through it. What you're trying to do all the time is understand where you are in the journey, and when you are moving into congestion phases and when you're coming out of congestion phases, and that's what these pivots do. They help to define floors and ceilings, and they also give you a sense of where those are, and also the exit points once that region of congestion is broken. You can see we're still trading around this level. It's not moving particularly. Let me just head over to, oops, my speakers have gone a bit funny. Let's just get that back there. Excuse me for a moment. That's better. There we are. Let me just pull up the, here we are. This is on Trading View. I know we focus a lot on NinjaTrader. I just wanted to pull this up as well. I've got several layouts here. This is on multiple time frames of the CSI. If you're not familiar with Trading View, it's a great platform. The nice thing with it is that you can just run it on the browser. You just log in and run the indicators on the browser. We haven't got all the indicators on Trading View because the script is not powerful enough, but we've certainly got the CSI there and a whole bunch of the other ones as well. But this is CSI on multiple time frames. I've got this set to 5-minute on the left, 10-minute in the middle, and 15-minute on the right-hand side. And this is the move we're seeing at the moment. The yen, the euro rising. The yen is flattening off. The euro is still rising here. The yen seems to have got a little bit of way to go. And if you're trading over on a 15-minute time frame, then you've got a long way to go. And that's what it comes down to in terms of your trading perspective. Are you scalping this, or are you going to sit here through the inevitable reversals, pullbacks, and so on and so forth, and hold for a longer term position? So that's the CSI on multiple time frames. That's associated with the respective chart. This is on 15, and I've got the 5-minute chart running here with all the indicators. You can see the trend monitor down here. It's flip-flopping at the moment. It's tried to go into bullish, but it had never got there. It's flip-flop back into red again. Got decent volume under these down candles here. But you've got a lot of volatility around it. And remember, we're also half an hour into the US session. So whenever you're into the US session, whenever you see session crossovers, you're going to see volatility. You're going to see potential reversals, all sorts of things going on. And we've got the cash markets open. Yeah, they're open in 4 minutes or so because you're an hour. You're in summertime. We are not in British summertime yet, but we will be as of this weekend. So we'll be back to the usual 2:30 for us in the UK for the market open.
Do you want to just answer the question that Simon's got about when you see something on the daily chart and you go and use it?
Yeah,
you get on a fast chart?
Will do. And this is just one of the many layouts that you can arrange with Trading View. It's a very powerful charting platform. It's very elegant. It's got lots of bells and whistles. It's very attractive. It's got great volume profiles, and I've just got this set up with euro dollar on 3, 5, 10, and 15. And of course, you can run it on a Mac. So if you're a Mac, person, as indeed we tend to be, and when we're doing other things, then it's great because you don't need Windows to run it. Let me just answer that question. Sorry, I apologise, Simon. I have my chat box closed down. Let me just drop that out of the way. Here we go. Back on the euro yen. It's now starting to take off. I'll come back to your question, Simon. Don't worry. I just want to see this go. And let's just pull that back a bit. There we go. Widen it up a bit. There we are. It's a bit better. So now we're starting to see that move develop, which is nice. Let's go up on 2.5. There we are. We've gone through this relatively minor, but nevertheless, it was enough to cause the market to pause there. And as I said, you're looking at potential 10 pips up here. Relatively easy in terms of the price action moves, provided they're supported with decent volume. Volume's falling away a bit here, but it certainly came into support here. We had a little bit more buying here, and now we're starting to see this move. And depending on how this candle finishes, and the associated volume will give you a heads up as to what to expect next. If it finishes with a big wick and a lot of volume, then it's not looking terribly strong. If we close with a nice widespread candle with minor wicks top and bottom and decent volume, then we should be looking for the next leg up on the move. Just see how that pans out. Down on the Renko. Nice move on the Renko, and the Renko smooths the price action out. It really does. Works brilliantly with the trend dots. Also, the other indicators here you can see are attached as you would expect. We've got the trend monitor down the bottom, works in exactly the same way. The trend dots here work very close to the market. Transitioning through into grey, we had a little bit of red. They will always move first. The trend monitor will always move second because it takes a more considered view of price action. It looks back further, in other words, to try and anticipate whether the shift in direction is actually going to develop into a full-blown shift in trend, in sentiment, or is it just merely a minor pause and pullback, which is inevitable part and parcel of every price move. And down onto the daily, we're starting to build a nice deep hammer candle here as well. Right, let me just answer Simon's question before I forget. Right, let's say, let's say we're in overbought. Let's say we're in overbought condition. Daily chart, VPA says we're in a distribution phase. Market makers will drop market maybe a few days on my experience. How relevant news announcement? I mean, whatever news announcement, positive or negative, will drop. Why? Market makers do all their little ping pong dance and have many market makers entries to just reverse and go up. I think news is just bullshit. Yes. Well, they will use whatever they feel is available to them to use to manipulate prices. It's as simple as that. I'm sure you've heard us say many times before, markets go up on bad news and down on good news. It's all relative. Anna was reading, I think, from one of her best buddy at the moment, who's the ex-bond trader, 45 years experience, who is completely bamboozled by the reaction of the dollar, as far as he's concerned at any rate, where basically he was saying, I think a similar sort of thing, where fundamentals were not supportive of the price action that you were seeing on the chart. And I think that's certainly true. It's one of the things I think which has changed, certainly in our trading careers at any rate, over the last 20 odd years, certainly in the last 10 at any rate, as far as the forex market's concerned, where the fundamentals, I'm not saying they're not important anymore, but they seem to have a much reduced impact, a less impact on the market, and also I would say much more difficult to read. I'm not saying it was easy to read 10 years ago, but I think he was saying the same sort of thing. It was easier. You could anticipate that, a good news key piece of fundamental data would have this reaction in this particular market. It may not be a huge reaction, but certainly that's the anticipation, the expectation. And if you read old trading books about fundamental news, that's really pretty much what they will say. They say, well, if this happens and it's good news, then it's a big announcement, then this should happen with the dollar, or that should happen with whatever it may be. That has definitely changed, partly because you've got so much additional, partly through social media, to be honest. That's part of it. It's partly the fact that leaders, particularly Donald Trump, for example, will tweet on social media. I mean, 10 years ago, that never happened. Probably even 5 years ago, it never happened. And that sort of stuff is manna from heaven for the market makers, because it just gives them an opportunity to make yet more money and twist and turn the market. And the other thing we are seeing, particularly in the UK, particularly against the pound, is obviously the whole thing is overlain with Brexit, and therefore any economic data is really secondary. It's really not terribly important anymore, because the whole market is just Brexit focused and concentrated on one issue. And until that issue dissipates, then it's you know, all the other news can come and go. We can have the best GDP in the world. We can have, you know, fantastic inflation figures, et cetera, et cetera. It's really not going to impact very much. And it's also, the other aspect of fundamental data is the cyclical nature of it, whereby when interest rates are of little consequence, then they're not going to have any impact. There's no consequence whatsoever when the global economies are in deep recessions we've had over the last few years. What is the significance of an ECB meeting or a UK central bank meeting or a US Fed meeting? They're insignificant. They have no relevance to the market whatsoever because everybody knows interest rates are not going up. It's as simple as that. Hope that answers that one for you a little bit, Simon. I'm just going to pass back to her. I'm just keeping an eye on this because it's carrying on, but it's, you know, it's a little bit laboured.
I just a little bit about fundamental news as well. When I was, remember at the end of January, David, I went up to London to the city, and I met with all sorts of interesting people. One of them was an economist, and he'd also was interested in trading, and he said, why can't I trade? He said I could tell you where an exchange rate is likely to be in, you know, a year or 18 months time. But on a day-to-day basis, on a short-term basis, I just can't do it. And in a way, when you look at the longer-term charts, the slow, obviously the days, perhaps not so much, the weeklies and the monthlies, they are much more reflective of the opinion on the exchange rate, as it were. And the reaction, if you like, the knee-jerk reaction, are always going to be on the faster time frames. And then you have the sort of charts in the middle. You have the hour and maybe the 4 hour, which, you know, you can, for those of you who maybe don't have time to spend at your screen, you know, full time, as it were. But there is this tension, if you like, in this market, in as much that the vast majority of traders do want to, you know, they want to take advantage of these shorter term moves. The shorter term moves may come to, you know, not an abrupt end, but a temporary stop because of fundamental data. So you think, well, I'll go to the, you know, the slower time frames where obviously a piece of news is just going to be absorbed, and then you fall into, well, you know, as you go further out into the slower time frames, they're also going to reflect much more as I said, these fundamentals in the sense of, you know, what is value, what is fair value for that exchange rate. So it's part of the reason why this market is complex. It's not complicated, it's just complex. The vast majority of traders are on the faster time frames, finding trading opportunities in pairs that are likely to move in the session that they are looking to take a trade in. And as I said right at the beginning, you know, understand which of the pairs, which currencies are likely to move in the session that you are looking to take a trade. And also understand what you see on the chart. I've been tracking the pound yen. We are still trading within this volatility candle. Now, you know, the trend monitor is actually still blue. It's not, there hasn't been a significant change to the to this move higher. It's simply being contained, if you like. You could say it's a trend with sort of, it's not even, that was the volatility. It doesn't have any clear direction yet. It will have a clear direction once it takes out either the high or the low of this volatility candle. And because we use multiple time frames, we've also got the same situation on this candle here. So if you're not in this trade, we would simply have to wait. Going back to the slower time frames, A good chart to have, if it's possible for you, is the 8-hour chart, because that breaks up into three 8-hour periods. So, for example, if I on Ninja, if you put the data box up, what it tells you when you hover over it, it says 1 o'clock. That's the time that the candle will close. So this candle closed off at 1 o'clock our time, because the timestamp on NinjaTrader is your local time. If you hover over onto this candle here, it says 21 hours. That's when the candle will close off and go off into the Asia. That's the Asia session there. You'll notice, obviously, the volume histogram here. You say, well, that's a down candle, and that volume is nowhere near the volume, the prior volume, which is the New York session, and certainly not this volume, which is the European and London session. And that is because volume is relative to the participation of that particular trading session. And in Asia, there are just fewer players. There is a much lower liquidity. It doesn't invalidate what you see there, but you have to sort of learn, you have to read it in a slightly different way. So you have to sort of say, this is London, as we see here, and towards the end of this 8-hour session, we know there's been buying coming in because we have a wick to the bottom of the candle, and it's supported by the volume that we see under here. But you wouldn't read that. You wouldn't look at that and think, oh, that's so much higher than that. It's so much higher than that for different reasons. You would go back and you would perhaps look at, well, that's New York. It's that one there. You say, well, is that volume comparable to that? And you would look at the Asian volume, not almost in isolation. Is that the best way to describe it, David? Is there anything you want to say on that one? Now, what that's also telling us is, come to the end of this session here, on the move over to New York, the candle the candle itself will tell you that there has been a degree of continuation of the buying that came in under the wick of this candle, and it was supported with a reasonable amount of volume. So let's go and see. That's on the 8-hour chart. So what does that tell us on the faster time frame? Well, if you like, should give us a degree of confidence that possibly, all things being equal, and assume, if the pound yen, as we know, because it's got the yen in the pair, is also reflective of the broader market sentiment, is that going to be supportive of the move higher in the pound yen? The answer is yes, assuming that we don't get some other catastrophic news to do with Brexit. But as I said, the levels are there. You first of all, you have the overall picture in terms of the sentiment, because we understand this pair, we understand what each of the currencies in the pair is, what are the drivers for the individual currencies, and as a pair they also represent sentiment, but they also simultaneously have the influence of Brexit. And if we can see on the CSI, the yen is still falling at the moment. It is becoming it's coming down to an oversold, but at the moment it's still being sold off. You would then look at the well, how is it performing against all the other yen pairs? And as you can see, they were all fairly bunched together, but there's obviously some divergence in the pairs themselves. And if you were looking to take a trade on something with the yen, because there's been some pretty strong selling of the yen, and you're looking for a reversal trade, well, is the pound yen the one that you would immediately look at? And I would venture no, David. Yeah, is that it? The euro yen still climbing? Yeah. The euro yen is still climbing. The dollar yen is that's still climbing as well. And you would go off, you would have this on all your different monitors. So let's see what the yield is doing. Well, the yield is now ticking higher. If it were going lower, we would expect more yen buying, but we're actually seeing yen selling. And if we look at the indices, here we are, We've got the S&P up slightly, not hugely. The Nasdaq, that's the cash, and that's not the futures. The VIX has fallen. It's gone below 15. You think, oh well, that's good. You know, people are markets feeling wants to feel, you know, more positive rather than negative. Is that okay? Anything else you want to add to that?
No.
No, that's it. I think we're going to stop there because we're actually back later. I know a lot of you come along to the next session where we're going to be looking at the indices in a lot more detail, but and at the yen and some of the yen pairs. As I said, it goes back to this interrelationship, the relationships that exist between the four capital markets. And I suppose what you have to end up doing what we call cross-market analysis, because cross-market analysis will also, you know, it will also validate what you are seeing on the chart that you are trading, and can sometimes, you know, it can give you that extra bit of confidence, if you like, to know that you know, the position that you're in is actually, you know, it's going to carry on higher. I don't think there's any more questions. Let's have a look. Right, thank you very much. That's brilliant. Just quickly, David wants to say something.
Very quickly, just to let you know, I'm sure you've got it on your screens anyway, Euro yen's just coming up to test the 124.30. So, you know, there's 10 pips in there. It was pretty hard work, but it was there, and you know, it's just a nice way to end the session.
If I turn my microphone on very quickly before we finish, I know we've got some people maybe who have not been with us before. We've talked about the indicators. The best place to go and see them is at our site of quantumtrading.com. Here we are. There we are. If it comes up in a second. And you will be able to read up on all the indicators. That's for MetaTrader 4.5, Ninja, and TradingView. The next major platform that we'll be looking at is actually TradeStation. We haven't actually started yet, but we don't think it's going to take very long, David, because it's easy language. It's David and I used to use TradeStation a little while ago. I had an account with when TradeStation actually offered forex. It doesn't do forex anymore. I actually had a very nice account with them, but they withdrew out of retail forex for all sorts of reasons, primarily because they're US based, and I know it's very difficult. It can be very difficult in the States to. They're back internationally though, yeah, but they are back internationally now. So we've always wanted to do the indicators for TradeStation. As I said, we know the platform quite well. So that's the next platform that we're going to do. The individual indicators are behind these icons, which you can just click on. And then when you do click on one, let's have a look. The accumulation distribution, for an example, I've lost it. Oh, there it is. And it takes you to a page where you will have all the support pages, both for in terms of videos and just written explanation on the individual indicators. And so you can buy one indicator, you can buy a complete package. In fact, looking at the currency dashboard we have here, if you bought them individually, there's 4 indicators, they would come to 770, but the bundle price comes down to 497. And they really give you all the information you need as a forex trader: overbought, oversold, strength, weakness, global sentiment, and risk. And as I said, that's the screenshot from the site that we've seen. You can buy one, you can buy the dashboard, or a complete package. You get 24/7 support, and all upgrades are free. And if you invest in the complete package, you do receive all future indicators for free, and they're all covered by the 7-day money back guarantee. Earlier on, we had a look at a slide from the program, the forex trading program. Again, this is all at its own dedicated site, which is quantumtradingeducation.com. And if that loads in a second, there we are. And the program comes with the complete package. So not only do you get all the videos and PDFs, but you do get the full set of indicators. And you can choose whether you opt for the MT45 or the NinjaTrader ones. And the cost of the program, how it breaks down to, is less than £500 of the overall cost of the, it's in addition to the package price for the indicators. So anything else you want to say, David? That's it. No, David? No, that's it. Brilliant. We are back in about, we're going to have a cup of tea, something to eat, and we're back here at 3:15 our time. So, but if you're not going to join us later on, we're back on Tuesday morning for the London session, and then we're back at this time next week anyway. But whatever you do, have a great day's trading, and we'll catch you next time.